Folks, let's cut through the noise. This is Mark Roach, FutureWise Energy Advisory. With the straight dope on U.S. oil and gas as of March 7, 2025. I've been in the trenches in this game, decades in big oil, boots on rigs, boardroom battles, and now I'm out here calling it like I see it. No corporate spin, just the raw truth based on what's hitting the ground today. Buckle up, here's the rundown. Upstream production. Steady, not sexy. The U.S. oil and gas machine keeps chugging along. Resilient, even with prices doing their usual roller coaster bit. EIA's got dry gas production climbing from 103.7 BCF a day in Q1 to near 106 BCF a day in Q4 2025. Oil's holding its own too, despite a late 2024 price dip that should have slowed things down but didn't. Why? Well, operators got smart. Tech squeezing more out of less. Still, heads up, 2025 is looking oversupplied. OPEC Plus is cranking up and WTI might hang around $65 a barrel. Not a bloodbath, but not a gold rush either. In exploration, efficiency over wildcatting. Exploration isn't what it used to be. I mean, no more cowboy days of chasing gushers blind. Now it's all about playing it sharp. AI's new roughneck, crunching seismic data, sizing up reserves, tailoring drilling plans. Permian's still king, but the big ticket deals are thinning out. Other basins are getting a look as majors like Chevron scramble to keep reserves from drying up. Their reserve replacement ratio tanked to 45% in 2024, but that's why they're buying, not hunting. Exploration, it's a side hustle now. The real game's in acquisitions. In tech, that's the quiet revolution. Here's where the rubber meets the road. Tech's rewriting the upstream playbook. AI, automation, drones, you name it. Market for this stuff's headed to $42 billion by 2030, and it's not just hype. Offshore submersible bots are scoping rigs. Onshore electrical frac fleets are cutting emissions and cost. Schlumberger's gobbling up tech through M&A to stay ahead, betting on big efficiency and cleaner rap sheet for the energy transition. This isn't your daddy's oil field anymore. In A&D and M&A, big deals, then a breather. M&A was a barn burner in early 2024, $51 billion in Q1 alone. Conoco snagged Marathon, Exxon grabbed Pioneer, all to lock down Permian turf. But 2025, it's cooling off. Buyers and sellers can't agree on what a barrel's worth, and the prices are wobbling. The frenzy of 2023 and early 24 public company mashups has slowed private deals and smaller fries. Chevron's still duking it out with Exxon over Guyana assets in that $53 billion Hess play. Arbitration's a mess. Point is, the consolidation waves crested for now. In regard to banking and prices, gas is up, oil is down. Banks are still the grease in this machine, funding deals and riding out the storm. Oil prices brace for a dip. $70 WTI, maybe 74 Brent if we're lucky. Upstream oil outfits might feel the pinch, but gas players, they're smiling. Henry Hub's pegged at $3.80 to $4.25 per million BTU in 2025, better than the $2.20 lows of 2024. Demand's outpacing supply. LNG exports are roaring, and storage is tightening. Gas is the sleeper this year. In the big picture, navigating the chaos. Look, the upstream sector is in a weird spot. Consolidation's on pause. After years of blockbuster hookups, exploration's gone surgical. Tech's the MVP, and A&D's still how you grow when organic plays fizzle. Trump's back in the saddle since January, pushing drill, baby, drill, kicking LNG export bans, or killing export bans, fast-tracking permits. That's a shot of adrenaline, but don't expect rigs to sprout overnight. Operators are playing it cagey, eyeing cash flow over breakneck growth. Fiscal discipline's the name of the game, and the new administration's just finding its feet. Global ripples are coming, but they aren't here yet. What happened in late 2024, second half of 2024, set the stage. Oil and gas outfits leaned hard into tech, AI, frac, automation, running leaner with fewer rigs, digital tricks, cutting downtime, juiced analytics, and kept production humming. But here's the kicker. A lot of U.S. operators pumped the brakes on growth, banking cash instead. OPEC Plus eased off, hinting at 2025 being a glut. And everyone's watching Trump's next move. Exxon's Leon Mallon said it's best drilling about economics, not just rah-rah politics. Bloomberg's nodding along. Majors are playing the long game, timing their shots. Market movers, M&A highlights. Conoco Marathon, $22 billion deal closed November 2024, 2 billion barrels added. Chevron Hess, still tangled in Guyana drama. Devon scooped Grayson Mill for $5 billion in the Williston, but Q3 24 was quiet. $12 billion in deals per Inveris, the slowest in ages. Permian's tapped out on big fish. Trump's back. Took office in January 20, flipped Biden's LNG pause, and signed orders to unleash American energy. New Energy Secretary Chris Wright and Interior's Doug Burgum are oil patch vets. Watch them push permits and pipelines. Biden's last grasp banning offshore leases got torched day one by Trump. Tech wins. Halliburton's electric frac fleet is rolling out. Permian's buzzing with them. Schlumberger's autonomous geosteering is a game changer. AI's everywhere, driving efficiency and dodging carbon heat. There's an LNG boom. Trump greenlit Commonwealth LNG's plant. U.S. stays the world's LNG champ. Exports are set to climb, tightening gas supplies. Production and prices, steady as she goes. Oil's flatlining. EIA says 13.6 million in 2025, up 400,000 barrels a day from 2024. I'm skeptical. Rig counts aren't budging much, and tech's doing some heavy lifting. Prices? Well, EIA's at $70 WTI, $74 Brent. I might nudge to $71.50 and $74.80. Gas is a wild card, $365 to $380, with LNG and demand pushing it higher. No big swings unless something crazy hits. Regions to watch. Gulf of Mexico, deep waters cash cow, 14% of U.S. oil. Monster return on investment. Shell's whale platform online. Talos hit pay dirt at Katmai West. Trump's BOEM killed Biden's whale nonsense. Drilling's up 6%. Permian. Chevron slowing down, cutting CapEx and jobs. Exxon's king after Pioneer, $3 billion in savings. Diamondback's $4.1 billion double eagle grab shows there's still meat on the bone. Flat growth, though, about a 10% more wells. Eagleford, heating up. Crescent's $905 million buy. Total Energy's jumping in. Wells up 2.8%. Haynesville, Chesapeake Southwestern, $7.4 billion expand energy merger makes some gas giants. Rigs are dropping, though. Well, here's the Roach take. This ain't the go-go days of wildcatters and endless rigs. Operators are tighter with cash than a roustabout's grip on a wrench. Tech's keeping us afloat. M&A's growth, the growth engine, and Trump's shaking the regulatory cage. Oil's soft, gas is firming up, and the U.S. stays a global player. If we don't trip ourselves after 2025's about balance, not boom. That's the view from here. Mark Roach, FutureWise Energy, signing off.